Today, we've got Zack from Phipps Brittain, and we're talking about Kitchener-Waterloo. Zack, give us the update.
All right. Who remembers when the government in Ontario said we are going to build more homes faster? We are going to
Oh
build
my God.
150 units a year until 2031. We have built a total year to date 180,000 in the entire country, not just Ontario. Just in Ontario, we have 56,000. We have a third of what our target is. The
Yep.
reason this is important is because we are continuing to grow in population. If Ontario wasn't growing, this wouldn't be as important of a conversation. We added 500,000 people to Ontario in 2023 alone.
Welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, your host, and today we've got Zack from Phipps Brittain, and we're talking about Kitchener-Waterloo. Zack, give us the update.
Waterloo Region, baby. What I expected and what a lot of, real estate agents and mortgage brokers expected is those interest rates coming down. All of a sudden, everybody's diving back into the market. It's gangbusters, multiple offers, 100K over asking all the time. Ladies and gentlemen, we are not quite there yet here in Waterloo Region. So this week or this month, we're going to dive into market stats. Yes, I got a little, maybe a breath of optimism, cautious optimism for you investors, and some things to kind of just check ourselves as we're going into the winter months and looking down the barrel of 2025. Adam, you and we're going to get a lot of opinions and some back and forth, and I would love some comments from the viewers and the listeners on our trends section of this video. I think if anybody takes anything from this video, it's that section where we're going to be talking about not just the local landscape of Waterloo Region, but also just big picture trends and how they're going to impact real estate here in Southern Ontario. And I know the other agents and brokers and investors on the channel are already thinking ahead and already kind of looking at how a lot of the policy changes, a lot of the economic changes and financing changes are going to really impact how investors make decisions looking into 2025. So I'm kind of pumped to get to that section personally. And then we're talking what we're looking at for 2025, what my goals are, what our investors and our network are really looking at, and then bigger deals. That's something we've talked about on the channel, and we'll get into a little of that towards the end. Earlier this year, I was in a hot ones trend. I was doing a lot of hot ones memes. I was including some of those in our videos. But recently, when we were, getting ready to purchase and close on our biggest investment yet, I started playing the game in my head as we were making the decision, inspired by Arya Stark. Big, Game of Thrones guy, read the books, and then, the series came out. And she's just a badass character. She's just
Yeah, the books are
badass, right?
so good too.
So good. So, she figures out that game from one of the other main characters, Littlefinger, about, okay, well, if he wants to figure out what's the worst that could happen, he just imagines, okay, if I'm going to do business or I'm going to try and manipulate or work with this person to sway them the way I want to, what's the worst that they could want? And then you play your mind back from there. It's just, I feel like a lot of investors have felt that pain of a rough come down from the all-time highs, a very swift kick in the rear, if you would. And people were either, put themselves in a bad position, or the market changed up on them, so their strategies weren't working anymore. And you kind of start thinking the worst. Well, I also started playing a different game, pretending I'm the genie and I'm making all the wishes come true and everything's perfect. So my investing, is pretty consistent now that I've tried a lot of different stuff the first 9 years of my career. But I started playing well, what's the best that could happen? I'm not assuming everything's going to work out perfectly. It never does. There's no such thing as anything perfect. But it's like, if I could just dream a perfect investment, or a perfect portfolio, or a perfect year, what would that look like? And so I started doing that with the types of deals after sifting through hundreds of deals and not really finding a ton of value. And then I accompanied that with the evil side of things, or what's the worst that could happen. And I just wanted to breathe a little bit of optimism into the market. Think a little bit more like the genie, ladies and gentlemen, but protect yourself along the way by doing the research like you're doing now. I don't like people coming on the YouTube channel to watch our videos, and everybody else that's doing some awesome stuff. Like that ADU video that you guys did was sweet. There is a lot of opportunity in the market. And I'm getting a lot more calls, and I'm talking with a lot more investors that are getting ready or making changes to their portfolio because the financing landscape has changed, or the prospects of finding deals is looking a little bit better, or they've adopted a new strategy because their past strategy isn't going to work anymore. And so just want to encourage people, look, if you want to know what's going on in Waterloo Region, thank you for watching the videos. Come over to the investor hot list. I send out weekly updates where I put in a little bit more data, any off-market deals, any on-market deals. And I get a lot of email replies back from our investor hot list, people asking specific questions about deals where, a quick reply back or a quick phone call can maybe point you in the right direction. And I know that's why, Adam, why you do the videos and you're on the YouTube channel along with the other sponsors and people making videos here, is genuinely want to contribute to you investors out there. So this is a good opportunity to get more access to Zack. I know you and Pete will put the links in the description there, but
Yep.
we're just going to get in the goods. Investors, check yourselves. I heard an amazing quote. An interviewer was talking about how he asked Warren Buffett why more people don't follow his investment strategy. And it's because people aren't okay with getting rich slowly. And that
Yeah.
just kicked me in the face. I was like, oh my God, that's why people are looking for, the next hottest thing or the newest trend. Or listen, investing in anything, specifically in real estate, is a long-term undertaking. We've said it here before, I'll say it again, is the real magic doesn't even happen until year 3 to year 5 or even later, is in most investment scenarios. And so I just want to encourage people to identify a strategy that works for your current situation, but also your future goals. And that always starts with, hey, do I have the time and energy and expertise to be an active investor, or am I better suited as a passive investor because, maybe you don't have the skills or the time or the energy or the interest, but real estate is going to be a good asset or a good vehicle for whatever you want to do. And so, for me, Adam, like me and you, I'm an active investor, right? And as I get older, or as I get busier, or as my goals for my investments change, I may, slowly start to shift to a little bit more of a passive investor. But I think people just get really keen on getting really quick results because that's sexy, and they feel like if you don't get results right now, then it's not successful. I'm telling you right now, I have a lot of deals that I'm looking at personally that are like very okay right now, but I'm looking them in year 5 and I'm like, Jesus, Murphy. Even if it's half as good as I expect it to be, yeah, I think I'm really interested in this. And so I just wanted to really encourage you guys, if you're trying to make up your mind on like what type of investment property you want for your first one, or you're thinking ahead and you're like, you can do the first one, but I'm going to add a couple more because I want to make real estate investing my big chunk of my portfolio. Have a critical conversation. Call investors like myself or like Adam or people in your local market that you know and you trust that have built portfolios successfully. Ask them the pros and the cons, what they like about it, what they don't like about it. And that should help guide, but not ultimately make the decision for you. And I know, Adam, I know you're gonna like this, is just take more action,
Yeah.
right? A lot of investors, you guys are on the sidelines, you've been on the sideline. I get it. The timing's never going to be perfect. Your personal situation, the market, financing, properties, whatever. You're never going to get perfect. But I will tell you right now, if you look at more deals, you have a better chance of finding a really good one. If you talk to more investors, you have a better chance of making less mistakes. If you talk to more mortgage brokers, more wholesalers, more owners of property, more financiers, more construction management professionals, you'll learn more. You'll have more people that you can lean on when you actually do have problems. So you can flip those problems into a profit, because we don't want to lose money. And if we are consistently taking a crap load of action, success is just a matter of time. And it brings me
Yeah.
back to like how do I want to summarize this? It's like people just aren't okay with getting rich quickly. But I challenge somebody to actually just focus on their real estate investing for 3 years, 5 years. It will blow your mind how far you can get and how much you will
Yeah.
learn. Right. And so I know you've been investing a little bit longer than me, but it's just like, hey guys, like I'm 9 years into my real estate career, 6 years into real estate investing. I was investing in the stock market, for probably about 15 years, and I still do. But it's just like you look back and you're like, oh, holy shit, like how much you've learned, how much you've built in wealth, much more experience and confident you are. And so like if people need encouragement to take action, get off your ass, like start making some calls, start running some numbers, keep watching YouTube videos, start talking to other investors. Like there's so much you can do. And like
Yeah.
I'm getting fired up for next year already. And I was just like, you know what? Let's go get it. Next year's going to be a big year.
Yeah, and I think that the interesting thing too is like the more action you take, the more systems and processes you can develop so that each subsequent action requires less energy, and you just become so much more efficient over time the more you do something and the more you get mastery on it. So
Just stacking,
um
right? You just
yeah,
stack that skill and you stack that it's crazy. Like,
yeah, and you
imagine
start
how long
developing
it gets
tools.
stressful. Yeah.
Yeah.
And people don't underestimate that, don't undervalue that, but it's really hard for people to be consistent. People out there, raising kids, they're trying to start a business, they're working full time, they got a side hustle, they're taking care of parent. Like it's not easy. That adult life, you want to reach a level of success above average. It's not easy, but I'm telling you right now, it's simple. It,
Yeah.
you gotta be consistent. It's simple, but it's not easy. So that's my check yourself. That's my words of wisdom. But I did want to, before we get into more market data and some trends, which I'm pumped about, was helping you investors out there that maybe are having a hard time deciding or aren't clear on kind of the different options, Adam.
Hmm.
Passive and active, right? And so for you passive investors, like, it doesn't mean like you're not involved or you don't do anything. There's different levels to it. And the way I kind of think about it is, okay, if you're a passive investor or you want to be more passive and you don't want to necessarily have partners or lend or buy a real estate investment trust, invest in it that way. You can buy turnkey investment properties and just hire everything out. You'll do less work than if you do everything yourself, or if you have partners to do everything yourself, and your returns will justify that. Your expenses will be higher because you're paying people to do everything for you, but in exchange for that, you still get the hard asset to yourself, and like you still have options with it. There's also other people that are somewhere in the middle where they want to be somewhat involved, they want to maybe have some sort of decision making, or they don't want to be a small part of a big pie like maybe a REIT or a big partnership group. Well, find a active partner that has the time and the skills to manage tenants, renovate properties, fill empty units, right? Do the grass and the snow and the maintenance, and maybe you can bring the mortgage or the cash, right? And then also passive is like private lending or some sort of lending, right? There's lots of opportunity for that. I think as I get older, I'll slowly shift, like I mentioned, from the active slowly to the passive side, and then a combination of somewhere in between, right? But and then on the active side, like, I know, Adam, you come from a wholesaling flipping background as well, like done a ton of stuff in that space. If
Yeah.
you guys are out there like, Zach, I just need to make more money because I don't got enough cash to like go out and get some like good assets or really invest in some good property, start wholesaling, start flipping, like get that side hustle going. Like that is a, I need to make money cash quick where you want to be flipped. It's a little more, it can be a little more risky, right? It can be a little more risky, takes a lot more work. But if you take a lot of action as a flipper or a wholesaler, man, there's money to be made there, baby. And then Adam, you
Yeah.
did a lot of value add as well, because a combination, typically of wholesaling and flipping a lot turns into value add as well. It's typically a big combination, but that's how I
Yeah.
built my portfolio. Right. I was doing value adds for smaller to medium sized multi units, anywhere under 6 units because I could get great residential financing. I'm going to do, duplex, triplex, fourplex conversions, or I'm going to
Yeah.
buy an existing fourplex and renovate the units and charge more income. Or, people underestimate things like, oh, adding extra parking, adding extra storage, like making the layout better of a property. And anyway, not to get too off track, but then the buy and hold and manage. Like, if you buy boring buy and hold real estate and you're just going to manage it well and be okay with holding it for 10 plus years, I don't know too many broke guys that have held real estate for more than 10 years.
Yeah. Yeah.
Show me
Seriously.
one.
Yeah.
Show
I
me
don't.
one.
None that I
So
know.
if you guys are
Anyways.
looking for this like simplest, hey Zach, I'm in my 20s, 30s, or 40s. I got a career, I got a family. I want real estate to be a part of my, overall retirement portfolio. I want to retire in my 50s if I'm lucky, but I'm good to work until I'm 60. I've said this before. You buy one, 2 or 3 unit property every other year, every 5 years for the next 5 or 15 years. Like, let's not overcomplicate it, guys. You're doing great. So, just to help you investors out there, if you're having a hard time kind of picking which side of the fence you want to be on, I wanted to cover that real quick because it will kind of tie into how you should be thinking about the numbers, how you should be thinking about the trends, how you should be considering investment opportunities. And in order to consider that, Adam, we need numbers, we need data. I am
Yeah.
a data and statistics decision making individual. If the numbers look right, I'm going to start there. For October, we're about a week into November, maybe 2 weeks into November by the time this one comes out. Actually, sorry, a little bit later, guys. But our market did not explode after interest rates came down. Ding, 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 ding. Shocker, Adam. So interest rates take a nice little bump down. I'll take it. That's a win for us as investors and real estate holders, but we are not seeing an instant explosion in overall activity and prices. Listings sold are up about 7% year over year. But what's really interesting is we're still selling fewer units than our 10-year average. What makes that interesting, Adam, is our population has grown so aggressively in those 10 years. So for the last 2 or 3, we have consistently sold less inventory, less properties, while our population has grown aggressively. So that says to me, it's like, okay, we have more people here, but there's fewer properties changing hands. That means there's more people on the sidelines or more people that just aren't able to sell their property. So I think there's that little pent up supply, but I also think there's a little bit of pent up demand. And we're going to get into that after this section. Active listings, 1,700. Listen, if you guys are looking at these numbers and you're like, I have no context of this, comparing these monthly numbers to the previous month, the previous year, and the previous 10-year averages are a good way to get better context on where our market is right now. So active listings, we have more than our 10-year average, almost 50% more than our 10-year average, and we have 21% more than we did the same time last year. So we have less properties being sold, more listings on the market. That means prices should be
Decreasing,
down,
yeah, for
right?
sure.
Prices are staying the same. We're
Yeah.
within 1.5% of the same prices last year. So this is saying, hey, some buyers are thinking maybe I should be stepping in. But at the same time, I have a lot of sellers, a lot of people that are, making a plan to move a property, whether it's a primary residence or an investment property, and they're still on the sidelines because the prices just aren't quite there for them yet. So I'm going to be watching inventory very closely. Before we get to inventory, average sale price, 779. We're down of almost 1.5% from September, but we're up 1.5% from the same time last year. Pretty flat 12-month period, ladies and gentlemen. So then that brings me to the months of inventory. 3.1 months of inventory. That's down just a little bit from September. Correct me if I'm wrong, Adam, but seasonality is very real in Southern Ontario because the winters are winter and the summers are actually beautiful. So as winter comes, inventory 9 times out of 10 is going to hit the floor. So we
Yeah.
expect inventory numbers to diminish pretty much every month until probably about March. So watch for that closely. If inventory continues to dip really aggressively, then that may signal to us investors, hey, maybe the spring will be a little bit hotter than we expect. But if we're going to be coming into the spring with similar numbers, I'd be curious to see how the market reacts. To wrap this up, though, days on market, about a month, give or take. Really, really sexy listings, underpriced listings, really rare listings. Expect that to go in a week or less. You have condos that are overpriced. You have detached that are looking for 21 prices. Those aren't selling. And then you have everything else in between. And that leaves us with the spicy ratio. This is really skewed as a general stat for our overall market pulse check because the way the condo market is moving and the way the freehold detached market moving and the way the multi-unit market is moving are all totally different right now. So take this with a grain of salt, and I'll leave you with this on the spicy ratio. If it looks too good to be true, if it's priced low and they're holding off on offers, probably going to sell above asking price. What a lot of agents are doing and what sellers are doing, Adam, is if they don't get their asking price or the price they want after they list really low and get multiple offers, they're just going to say, hey, all you buyers, screw off. Here's our new price. And we're just going to sit on the market at that price. We've seen a
Yeah.
lot of that the last 60 days. Is that necessarily the best strategy? I don't know. It depends on the seller and their situation. That's such a case by case basis. But for you buyers out there that are trying to make sense of a little bit of the inconsistencies in my market in Waterloo Region, that's a big part of it. Sellers are trying to figure it out just as much as you buyers right now. I'll take a little bit of a deep dive in this, and then I want to go over like big picture kind of trends. Inventory section for Waterloo Region, guys and girls. Detached market, we have like 2.5 months of inventory. Not a lot of really good stuff in the detached market, but we have a big portion of the market that is probably anywhere from 5 to 10% overlisted in terms of like, hey, it should sell for 700, but they're at 750 and they're not really budging. Well, what that tells me is that seller, and this is a completely made up example, but that seller in that scenario just isn't quite motivated to come down to a I need to sell it right now price. So I know you've said it before, and I definitely said it before on this channel, is find the motivated. If that seller is not willing to come down to a realistic price that makes sense to you for the investor, present your offer. But if they're not motivated, next, as an investor, we have to be throwing out offers that make sense for us, the price and the terms that make sense for the investment. So you're going to get a little bit more no's now, I think, because there is a big portion of the market that's on there that's there. They're saying, hey, I'm interested in selling, but only if I get this sweetheart price. Well,
Yeah.
you know what? If that sweetheart price doesn't work for Adam, if it doesn't work for Zach, it doesn't work for us investors, we're going to throw them an offer that does. And if they're not willing to come to terms with that, we're kicking rocks and moving on to the next opportunity.
And you have to work with real estate agents that understand that as well. And that's why, like, the purpose of having preferred people on the channel is that, like, working with Zach or somebody like Zach, you really understand what a real estate investor has to go through. Because I know there are some people that out there that don't want to submit offers or will discourage you from submitting offers that are below the ask price. But, like, realistically, guys, you got to set your goals, understand what a win condition looks like for you, and submit offers where that is the case. Right. And I think that's the only way to do this. And it's like, well, how many offers should I submit? Try 50. Literally just submit 50 next month. Like, if you do
Yes.
50 offers next month and that doesn't work, do 100. And, like, I'm not actually even being facetious with these numbers.
Oh,
Like, with the wholesaling company, we would make literally hundreds and hundreds of offers a month in order to get maybe 5 deals. And obviously we were looking for a very, very specific product at a very low price. But that's the reality. Like, you just need to make more offers. More action will always get you more business. More offers will always get you more deals. And more deals you can do, the closer you're going to get to your goals. And that's how you actually win over a 3 to 5 year period, right? It's consistently making
preach.
offers, and you can't take a day off. Like, you just can't.
No.
Like, make 3 offers a day for the next 30 days. Just see what
Yeah,
happens.
you'll be amazed at how
Yeah,
much you'll learn,
it's
and let
amazing.
alone how much progress you'll make. It's crazy. And on that note, like, I have a lot. It's so cute because we work with a lot of newer investors, right? People come in maybe, and we work with a lot of people out of town that have done well, but their markets maybe don't make sense for the type of investments they want to make, or they have a property or two in town and they're ready to kind of take investing seriously, and they're like, oh well, do you think this is too low, or do you think the seller's gonna be offended? And there is a little bit of an art and a dance to offering and negotiating. There's no doubt about that. But I typically tell, like, if you even have a 10% hit rate on your offers as an investor, that's high. Like, they're used to seeing the property that's the one for them to live in. Like, that's the mindset. So I got to make sure I get this offer accepted. It's like, guys, simmer down. The chances of us finding the perfect property and getting it at the perfect price with the first offer is like zero. So let's get ready for a little bit of rejection, but let's position ourselves to be easy to work with, serious, and capable of making this deal make sense for the seller. Let's present it in a way that we think is going to make sense for both the buyer and the seller. Let's not be an a-hole about it, but let's, like, do that knowing that we're going to get some no's. And that's okay. It's okay for a seller to say, no, I don't want to sell at that price, right? As the investor, it's
Yeah.
going to happen. So I think you're absolutely right. And that was part of the reason why I wanted to include just take more action and be consistent, because the reality is, as our market is kind of coming into this period of shifting, which it really will over the next 6 to 18 months, it likely back into a seller's market, a very strong seller's market, where we have an opportunity to really throw a ton of offers out there without having to compete with a ton of people. And so that's what a lot of our buyers and investors making acquisitions now are doing. So
Yeah.
for towns and semis, for the inventory, just to wrap that up before I forget, we're seeing like a big shift to not those freehold townhomes that you normally see like in rows of 4 or 8. We're seeing a lot more of the townhouse complexes that are more stacked, and they'll have common element fees or condo fees associated with them as well. They may be at lower price points than, say, a traditional 1,400 square foot 3 bedroom 2 story townhouse. But there's fewer semis being built and fewer like traditional townhouses, but and more stacked townhouse styles being built. And then the condo market saturated in Waterloo region. But
Yeah.
the condo inventory that's out there and the condo inventory that's coming up is like A plus locations. So if you guys are condo guys and girls, we do a couple of these a year for clients, usually either student rentals or for family or for people that are out of town that want something more hands off. There is a market for these types of products for investors. And what we do see out there is there's a lot of inventory. And a lot of that inventory is probably either other investors or owners that are in a position where they really want to move on from it. And so we're seeing a lot more motivated sellers in the condo market, opposed to maybe the detached market right now. And then multis, Adam. That's pretty much all I focus on for my own investments right now. And the multi market is overpriced to say the least, for the vast majority of it, but that's common. So if you investors are out there banging your heads, think about it like this. Say you do an awesome thing and you buy a bunch of properties for the next 5, 10, 15, 20 years, and then you hold them for another 10 or 15, 20 years. All of a sudden you're in your 50s or your 60s, maybe in your 70s, and you're loaded. I'm rich. and I got to start selling off my assets because my kids aren't capable of taking care of it, or I don't want them to, or I don't want to deal with this property anymore. It's time to go. Is selling it this year for 200 grand less a better play than just holding on to it for another year or two? Even though you may not want to, but you'll be less motivated. Like a lot of investors, they're either, I need to sell it now or else I'm going to go belly up, or I'm only going to sell it if the right price and terms make sense. There's not a ton of in between. So find the motivated. And if you can't find that, throw a ton of offers at the unmotivated until you get the right time and the right place and the right offer. More action,
Yeah, I
baby.
mean, like
More action.
this is again, like I just go back to I simply made about 1,000 asks, and eventually I got to the person who agreed to hold a 96% loan to value VTB for me for 13-year term at 3%. And it's like that was in a hot market where everything was selling for like, 1.2 in terms of like list to sale ratio. Like you were literally selling for like 10 to 20% over the list price in every scenario, and
Yeah.
like multiple offers. Everybody was holding offers. It was like completely insane during those market conditions. And I just asked enough people that eventually I got to the one seller that had the right circumstances for me at the right time and gave him an offer that hit his exact goals. And that's where the two of us were able to put that unicorn deal together. And so I just don't believe that like any market cycle or any market conditions actually dictate whether or not there is a deal for you out there. It's really reliant on your action. And like with that type of extreme ownership, you can approach making more offers, asking people for more interesting terms, and doing it enough times that you eventually run into the person that's a perfect match for you. And that's labor intensive, but you can leverage a great power team like Phipps Brittain to help you do that, right? Like that's what they
Yeah.
do. So like
Yeah.
you
That's
don't
the
need to
bridge
be
the
out here
gap
doing
between
this
the
yourself.
effort.
Yeah.
Yeah. The effort to result. You want, if there's people that can go with that, like same thing for me, Adam. My first 6 to 12, my first 12 months in the real estate business as an agent, I cold called minimum 5 days a week. I'm an animal on the phone. I can have a conversation with anybody about anything on the
Yeah.
phone in person. I know how to negotiate now, right? Like you just, that skill now invaluable for me for the rest of my career. But you gotta be prepared to sit in an office and make a few hundred phone calls a day for a few months. And hey, they paid off. I'll take it, baby. I'll take it. Sales volume should be more like call volume. It's low now, but it's slowly coming back. There's not much I really want to talk about on that. Days to sell, same thing, super situational here in Waterloo region. Expect days to sell to be really skewed heading into next summer or next spring, sorry, as the winter months. You'll see some properties finally they'll, maybe they'll try and offload it before the end of the year for tax purposes. So somebody will take a deal way less. It's been on the market for 200, 300 days. That'll skew some of the market segments. Quick reminder on prices. We are currently 175 grand cheaper than 2021. That's not even the peak of 2021. 175 grand cheaper than 2020 on average. So you property owners that purchased property in 2021, 2020, I get it. You're feeling the pain. The asset value may be lower than what you purchased at. I get it. That effing sucks. Don't worry. I purchased property during that time. Every other investor property purchased property during that time. That's part of the deal. I'm buying properties in every type of market. But what I will say is if you want to continue investing in real estate and you believe real estate is going to continue to be a successful investment vehicle, take a hard look at property prices now because every year until forever, people are going to be talking about, oh, well, prices were this back then. I want now prices because in 10 years, I know they're going to be more expensive. So give me today's price, God damn it. And then the multi-unit market, Adam. This is really interesting for people watching this video. So the market for 2 to 5 unit properties generally super soft right now. 6+ units, way hotter, way hotter. There's a lot of reasons why I think that is, or why I know that is. Primarily, the investors that either have capital, have the skills or the resources and the experience in the larger buildings, they have the financial flexibility to weather a crappier storm that was the last few years. And they're trying to acquire these because they know there's not enough of them being built and they know rental rates are going to go up long term. And they know we can't build enough purpose built rentals, which are typically your 6+ units. So those are going to be a premium in the future, like they are now. And there's more people out there fighting for those deals, and there's just not a lot of them around. Whereas the 2 to 5 units, a lot of people that were just like me a couple of years ago, you're building your own portfolio by yourself, right? You got a primary residence and you want to buy a property for your kids to go to school at, or you want to buy an investment property to give your kids when they're ready to move out or to sell as a part of your retirement plan. a lot of those people start in the 2, 3, 4 unit properties, which is not a terrible idea at all. So we're seeing just as much inventory, or sorry, just as much opportunity in the 2 to 5 unit space because there's more inventory available. So I think there may be a better chance that you can sniff out a really motivated seller in that space towards the end of this year. That being said, we are seeing sellers be sticky on price in every market segment as investors. So find the motivated, start tossing offers, ladies and gentlemen. Start tossing offers. This section will bring it home, but I really want to get the viewers' comments on some of these trends. We had a really good comment about more political, or sorry, more control shifting to renters as opposed to landlords and investors as a larger portion of the market. People just living in Ontario become renters as opposed to owners. And that
Yeah.
just got me thinking there's some been really critical comments and really critical feedback from some of the viewers and some of the listeners. It's really cool to see people just thinking outside the box and thinking ahead. And that's why I
Yeah.
love working with investors is, they think a little differently, and that's cool for me. For interest rates, Adam, this is trending downwards. People are
Yeah.
getting real excited that we're going to get some more fat cuts, but a lot of that's going to rely on what I think is what's happening in the States. And then inflation is, if we can't keep inflation under control, all right, interest rates are going to continue to fluctuate. But if we're able to keep inflation, rein it in a little bit and keep it down, expectations that interest rates will come down a little bit more and find a landing not too far from where we're at right now. Any thoughts on that?
Yeah, I mean, I could see it. I think they're gonna lower the rates again. I don't know that it's necessarily a great thing though. Like, and I respond to all of our comments, and so I've seen people talking right now about struggling with the current rates or struggling with rates that they had, and they're coming into refinance periods now where they're like looking at these rates and they're scared. But if you go on like TD's website today when we're recording, they're offering mortgages for 3 years for 4.7%. And like, in
That should
my
be
honest
normal.
opinion, that's normal. Like, there's nothing wrong with 4.7. And I know that some people have purchased properties at 1.6% or 2% or 2.3. That's what it was for a long time. And now you're scared because it's 4.7. But the reality is, like, you never should have run your numbers to the point where your mortgage only worked at 1.6% when inflation was like 3 to 7, right? Depending on who you wanted to read from. It never made sense to have money as cheap as it was. Inflation was absolutely insane. I don't really see any reason to believe that inflation is going to change that much as we go forward in terms of like going down. Like, I think it's going to continue to be one of those things that we're constantly chasing because the government's always trying to either promote or discourage spending and employment and all the macroeconomic things. And it's like inflation's this crazy beast that when you pull one lever, it like affects 20 other things down the road. And so I don't think they have a great finger on the pulse on that. And I honestly don't really have a lot of belief that they'll keep that under control in the way that you would need it to be in order to have like super predictable rates for the next 5 years. So I think the real takeaway there, for my opinion, is I think rates will continue to go down a little bit, maybe 50 points or something in the short term. I also don't think that you should make investment-based decisions on whether or not half a point on your mortgage matters. Like, if a half point on your mortgage makes the deal break, it's not a deal. And so that's where I always encourage people to really consider strategic value add projects where you can add significant rent or revenue to the property by maximizing your actual highest and best use, right? Like, that's what you want to get a property to. So we want to look at decent neighborhoods. We want to add improvements that really and truly add rent, whether that's adding bedrooms, adding dishwashers, adding parking, adding storage, and refreshing all of the strategic renovations like bathrooms, paint, landscaping, lighting, kitchens, all those things that add real value. That's what we want to focus on. And a half point on your mortgage, it really doesn't matter. That can't be the thing that makes or breaks our investments. That's my opinion there.
Yeah, and like need to echo that. I think in my younger days when I didn't have anything to lose and when I needed to get the experience for the first deals, willing to take more chances on things like, oh, I need, keeping a little close on that financing. But you're absolutely right. The reality is the best case for everybody, from people who are going to be chronic renters to people who want to be super successful investors, is getting some sort of consistency back in the greater economy. And a part of that is keeping inflation under control. And if we're able to do that, we should be able to keep interest rates relatively in control. The biggest problem that we could have is a yo-yo for interest rates and inflation.
Yeah.
that would just kick so many Canadians in places that they do not want to be kicked, and it like just
Yeah.
not good for an overall market activity either. And that brings us into lending policies. And this one I think maybe a little bit quicker in the sense of like they're going to relax those in the short term to
Yeah.
try and generate more business activity in the real estate world because there's
Yeah.
a big portion of our economy that revolves around the
Massive.
success or failure of the real estate industry directly and indirectly. So whether it's big banks or big businesses lobbying governments to change or government entities who are policymakers and implementers making changes, like that is happening. It already has with the relax for the renewal and the stress test and the amortization periods. But if interest rates slide down again and activity hasn't picked up, we'll see fighting for interest rates. We'll see other, lenders, whether it be B lenders, alternate lenders, or even big A lenders trying new products or new policies. So I'm interested in that from a perspective of a consumer, but also just like a curious investor. And that
Yeah.
does impact my clients and myself as well. But they're going to relax kind of policies to encourage activity, period.
We do
Go,
also
go, go.
follow the US, right? So like
Yeah.
again, like taking a good look at what's happening in the United States right now. We saw obviously they just had a major election. We're gonna have a major election, I would think, pretty soon.
I don't know if
And
it'll be much of an election, but something's going to happen soon.
something will happen. And I would think things would lean more conservative, and I would think that that would have interesting effects on both the interest rates and especially lending policies, because I think that the various political parties have very different views on those things and may allow for more regulatory cuts if it goes the other way. So I'm
I
interested to
second that.
see what those effects are. It's hard to predict that stuff. And again, like that gets confusing for people. And I think really it always just comes down in the moment on an individual deal basis, run the numbers. And something at the start of the video that you were talking about, which I really respect, is like making sure that you take into consideration like the running of the numbers is the actual important piece before you buy the deal, because that's where all your money's made. And my system for doing that, and you guys have to have a system for this, my system for doing that is best, worst, and most likely, right? And so I run all three of those on a
Yep.
single sheet so that I really understand, because you were talking about what's the worst thing that could happen here, right? What's
Yep.
the worst thing that person could want from me? And what's my genie? Like, what's the best possible outcome if I get the exact appraisal I want, the exact rent that I want, and everything goes great on construction? Perfect. Let's run those numbers, see what it could look like. Push those numbers out as well, 3 to 5 years, just to understand if you have to hold the deal, but also understand your worst case if you have to hold the deal for 3 to 5 years, right? I think knowing both of those is great when it comes to actually making qualified decisions, which is like, hey, I understand the real risk. If this goes terribly, what's it going to look like if, say, for example, there's a political change and the policies get more tight, or there's political indifference and inflation continues to go higher, right? That's your worst case. Do you still make the deal? Yes or no? And continue making offers based on numbers that actually work on your worst case, knowing that your most likely is probably the thing that is going to happen.
Yeah,
And that's what I
I
do.
thank you for bringing that up because what I've looked at for the deals that I've really liked lately for myself and my group is if the worst case is I just have a larger percentage of my capital tied up in the deal a little bit longer than I
Yeah.
want. Oh, that's a worst case variable I'm kind of okay with right now
Yeah.
because if that's the worst case and the deal is still profitable and still makes sense for my 5, my 10 year, whatever, I'm looking at for that deal. Oh, okay. The deal still makes sense, but I'm not going to recycle as much out or as quick as I want. Well, okay, my investment strategy doesn't rely right now on how quickly I can recycle money out and repeat that process.
Yeah.
That's not the number one variable. So if I can get a smoking deal, but maybe I have to keep a little bit capital in there longer than I expected, and that's by the worst case scenario. Okay. I kind of get to that point as quickly as possible. If the worst case looks good, great. I'm going to go through the best case and I'm going to go through the most likely from there. And that's
Yeah.
such a effective way to help with the decision making process. So the new units and population, that's my joke of the day. We're going to get to the chart on the next one. And then rental market. One thing I've noticed, I've done a lot of leases for our clients in town here and for myself the last kind of 6 months. Just kind of happened. Not something we do all the time, but just happened this last kind of half a year or so. And what I noticed was the rental market is very much mimicking the sales market in the sense of good stuff that's priced well goes quickly, and everything else super slow. There is not
Yeah.
much in between. What I found was my old strategy was, I'm probably going to list it, maybe 100, $150 more than what I'm probably willing to take. I'm no longer doing that.
Yeah.
Now I'm listing exactly what it's worth, if not 50 or $25 less.
Yeah.
And I would much rather get, 25 to $100 less a month and get an A+ tenant and get it filled quicker than eat another month or two of vacancy. The
Yeah.
quality tenant getting paid as a landlord marginally less. For me personally, for the types of investments that I like to do for the majority of my clients, that is the way to go right now.
Me too.
There is not a ton of A+ tenants out there looking to pay premium market rent and have good credit, have good employment, you have good history. Like, guys, it's, that market has run up very aggressively and it's starting to tighten a little bit. Exact same as the sales market has. And then multi-units, Adam. I think a lot of the people that felt a ton of pain coming out of 21, a lot of that's either already cleaned up or about to be cleaned up in terms
Yeah.
of whether those deals have changed hands, whether they've, muscled through with additional funds, or whether they have bird those and they're coming back to market, or if they've gone belly up and they needed to be sold. I think a lot of that's kind of in the process or already been cleaned up. And we're starting to see a lot more competition come into that space. If you're in major markets, you're looking at 6 to 10 plus units in any city that's 50,000, 25,000 people even and bigger in Southern Ontario. There are a lot of people looking at those deals. They're going to be pretty competitive, especially if it's anywhere close to fair value. We're seeing a lot more competition in there. So I don't know if you're seeing the same thing from the other agents and other investors we're having on, or other deals that you're seeing, Adam. But that's something that we've noticed probably even 6 months ago and just kind of been verified over the last few properties we've offered on and really taken a look at. You're like, oh, okay, not a lot, but starting to see competition really come back.
Yeah, for sure. I'm definitely seeing and hearing that. And then anecdotally, like I've gotten a lot of inquiries on a commercial lease listing that I have that sat for like a freaking year and had nothing, and then had like 30 inquiries in the last like probably 15 days. So I don't know
Wild.
what that means, and that's a weird sample size. It's obviously one listing. It doesn't like reflect the
Yeah.
whole market, but like
Interesting.
I have no idea what caused that. And in fact, and this is going to kind of be annoying, I raised the price. So I took the price and I made it $250 more. And then I got like a million inquiries. And I'm like, what the
What?
fuck? What's going on here? Right. And so I
Mm.
don't really understand that, but I think it's worth just mentioning. Like, so there is like activity, right? Like I know people are talking like it's kind of stagnant or whatever, but it's in my experience
It
on
is.
this one listing, which is a terrible sample size, there's a lot of interest on this thing, and it sucks. It's not even a good unit. So I don't know. Like,
That's
it's
freaking
strange.
funny.
So raise your prices. Who knows?
We're getting to the joke of the video, and then we're
All
gonna
right.
bring it home for you investors. All right, who remembers when the government in Ontario said we are going to build more homes faster? We are going to build
Oh god.
150 units a year until 2031. I literally went back and checked the article last night when I was going
Okay.
through our video for today, and I was like, "Oh yeah, we are current. This is Canada. This is Canada. I have the Ontario data in my mind. We have built a total year to date 180,000 in the entire country, not just Ontario. Adam, before I say it, if any of you are still watching this video or listening, say it out loud or leave me a comment with how many total new housing starts there have been in Ontario. This is up until Q3 was, so that was end of September in
Yeah.
Ontario. Canada wide, we have 180,000. Just in Ontario, we have 56,000. We have a third of what our target is. I have very much looked into and would be very excited. And a goal of mine as a businessman and as an investor, it would be to build my own rental properties. I think that'd be fucking cool.
It'd be
I
cool
also think it could be very profitable.
and
But I have
annoying.
been
So cool.
smashing my head against my desk for the last year and a half trying to figure out how to make it work with the
Yeah.
resources that I have and that I'm capable of, and the skills and the people I know, like just in Zach's world. So this isn't a perfect world yet, ladies and gentlemen. I am not a developer or builder yet, but it is so hard to make building make sense.
Yeah.
So hard to make building make sense in most major markets in Southern Ontario. I get it. Builders, developers, these big box corporations, jillionaires, the greed. I feel you people that think like that and are saying those things. But I am telling you, it is such a difficult freaking business. It is so hard. And I am not surprised that we are consistently missing the mark on how many properties are being built in Ontario, because it is insanely difficult to do that. The amount of capital and risk you take to develop
Yeah.
real estate in Ontario specifically is insane. So I am not surprised because people are not properly incentivized to bring new properties to market. The
Yeah.
reason this is important is because we are continuing to grow in population. If Ontario wasn't growing, this wouldn't be as important of a conversation. We added 500,000 people to Ontario in 2023 alone. We are building them 56,000 properties this year.
Well, no, we're starting to build
Sorry. Thank
them
you. They're only starting,
56,000
let
houses.
alone which
So
ones,
think about
when they
that,
will.
folks.
It's crazy.
Because starting a build is very different than building a house,
Thank
right?
you.
Because and anybody that's owned or tried to purchase a new build, you know what's up. Because it takes 2 to 3 years to build these damn things, and that's hilarious. And I know somebody watching this and be like, I have mine built in 6 months. Good for you. That's not how it actually works in these large developments.
It's
Because I've watched it happen a million times. I've tried to buy them, and they're so frustrating to buy because they take 2 to 3 years. And the contracts in order to purchase them are absolutely ludicrous. You run into like a
they're
50-page
crazy.
agreement where there's like a million things that could adjust your cost as you go along. So it's like, it's one thing to even say that we started building 56,000 houses, but it's like, okay, what do the purchase agreements look like for those? Like, when are they going to be built? What are the terms and conditions to agreeing to purchase one today? And then you saw also this like steep decline in assignments of these things. So like there used to be a
because they
strategy
started
for
locking
people
up
that
assignment contracts. You couldn't do it.
that's right. You can't do it. So it's like the whole thing has changed and it's become more heavily regulated and harder to do. So it's like, and then in Barrie, we're about to shoot the Barrie market update. We've got the double dip development charge where Barrie's just throwing fees at you. And like you
Oh,
get surprised by like a hidden 80K fee and you're like, what the hell's that? Like,
yep.
it's
Kitchener's doing the
10% of my
same thing.
bill. I'm with you, man. Like 56,000 starts is not enough when you're bringing 500,000 people in. So
So
I
I
know
even
it's tough.
in my investor hot list email, I even said, okay, even if population grew at 50% less than projected and we built 50% more than projected, we're still effed. Like
Yeah.
if I did the best case make believe, may wave the magic wand scenario, we're still effed. That just tells me I need to start going out and freaking buying some more properties because rental rates will continue to climb, asset values will continue to climb. So I'm going to bring this home. Sorry for the long-winded comments, but I like these trends are so important to us as real estate investors to go big picture. Do I think the environment is still suitable for real estate investors, short term and long term? Yes, because I think the underlying trends of affordability are not going to even get better, let alone change entirely, which is a shame for Canadians. But as a real estate investor, it means that the environment is going to stay consistently good for me. So I'm going to continue to invest in real estate. So returns for the risk and for financing, these are the main reasons why I'm continuing to focus on larger deals, primarily, 10, 12, 15 plus multi-units in Southern Ontario. Hard to find, but those deals, if you can get them, they can be very, very sexy for short-term and long-term wealth, especially for the risk. We're active in the ADU market, lots of clients jumping on that train and very closely watching the missing middle because the missing middle, that's, kind of, less than 10 units in residential suburbs or midtown locations in Kitchener-Waterloo and Cambridge. Those numbers can still actually look really sexy especially for maybe smaller to mid-sized investors or maybe people looking to get their start into building or developing or doing larger value add projects. I'm watching the missing middle very closely. LRT coming in Cambridge, that's been announced, that's long gone. Hasn't been built yet though. Large developments for condo complexes in like really, really good locations. So the surrounding areas around them look kind of sexy to me there. And just the quality and availability of building ADUs, whether they're detached or attached, a lot more of the market is good at that now. And then last but not least, just shout out to everybody that's on the Canadian Real Estate Channel. Like my goals moving forward, Adam, are networking, educating, and just collaborating with investors. When you're first starting off in your sales career, you need to learn how to freaking sell. Well, and
Yeah.
then I needed to learn how to invest. I think I'm pretty good at some of those things. Great. But I, realized, and to say it out loud on the channel is, easy, but it's like you will grow wealth, but also knowledge way more by networking and connecting with other people that are in your space. So that is all I focus on. Everything else, we got the systems for, it's falling into place. For investors out there that want to stay in touch, Investor Hot List is a great way. Our social media channels are a great way. We are going to be doing a lot more on this channel and on our own socials for our bigger deals after, they've been closed, it's official, we've operated them, we can show you real numbers. I don't want to talk about stuff that we're going to do. I want to share you guys what I'm actually doing and working on so you can see the types of deals that we look at and why. So stay tuned for that. And I'm looking forward to sharing kind of our predictions for 2025 and, get investors, not necessarily jacked up and excited, but I want people to know that there is a way to make this work. So I'm excited for me and you to share that in the next couple of videos, Adam.
Yeah, I'm looking forward to that, Zach. And thanks again so much for coming on the channel and giving us an update on your thoughts. And obviously, just being an expert in that area really helps us to keep people informed. And love having you on the channel. Can't wait for our next update. Just remember, guys, there's investments to be had in every single market, every market condition. Right now, there's a ton of listings for you to go check out, but it really doesn't matter if you're not making offers. So get out there, make offers that work for you. And of course, keep in mind your long-term broader strategy and what your actual goals are, and let that inform the offers that you make. And that's really all you guys need to do to be successful in this business. Take a long-term approach, make great offers, and take more action. So thanks so much, Zach.
Yeah.
And we'll see you back here next month. And if you guys aren't already subscribed, make sure you hit that button now so that you can actually get the update for when we're back. Talk to you soon.